In Chinese inventories, accumulation is in full swing right now. Some skins have up to 5% of their total supply in one Chinese inventory. If that person hits sell, every buy order evaporates and the price is skin, and subsequently the market cap goes straight down. And that's not a theory. It happened 2 times last week. So let's see who's accumulating, what they're accumulating for, and a hidden pattern that'll tell you if a pump actually has legs or whether you're just someone's exit liquidity.
And now for our Counter-Strike report. New York's very own Mike Water.
Welcome back to the news, China edition. I'm your host, Mike Water tonight. The holiday season surrounding Chinese New Year has the market in a little bit of a limbo state right now. When charts stop going up all the time, so do a lot of people's attention. But that is the wrong way to think. This is when inventories are accumulating and when you should be accumulating as well. And the money is shifting into new speculation and new plays that we have not been introduced to yet. So let's set the framework. Market trended a little bit sideways over the week, but over the last 24 hours we have seen some stark price movements on Steam DT. The first generation glove index is up slightly, but a little bit of a deeper look within the Bloodhound glove index, which are in generation 1, saw a 15% gain in price. Armory items have shifted back into a little bit of an upwards movement. For more details surrounding that, Armory report was posted yesterday if you'd like to take a look. Stickers are still getting some attention. The Katowice 19 stickers are the biggest winners with their index up around 11%. Now whether this is China or not, we do not know. However, it is good to have in our knowledge bank. The sticker report is coming. I said I would do one once a week, but I got sidetracked on my schizo math theory, so forgive me. But regardless of the boring price action that's defined the market over the last 2 weeks, under the surface, there's still a quiet accumulation window happening. Those pumps take all your attention, but those pumps don't happen every single day. Take a look at the market cap. If you zoom out to the last year, there was a pump in May, then it slowed down. Then a pump in July, slowed down. There was a pump in late August, early September, slowed down. Pump in October, crash.
We're down 22! Dump it now! Everything's bleeding! Look at those graphs!
Oh my god, no!
Double, you're dead!
I'm trying! The book's frozen! Nothing's going through!
We're finished. We're absolutely finished.
And then the last pump, late December, early January. The reason why it seems like there's a different pump every day is because they're pumping different skins. But between every pump, there are breaks in which accumulation happens. You need to accumulate so that when you do that final buy and prices shoot upwards, you have control over the supply. That takes time. We are simply in an accumulation phase. So we need to figure out the difference between accumulation and manufactured exit liquidity, because we saw that exactly last week. So when you look at a chart and you see a big fucking fat green dildo shooting upwards, your first thought being, I should probably buy here, is wrong. That's how you get burnt. Not in this market, any market. Instead, your response should be, what patterns led up to this? Why this skin in particular? What case is it in? Is the case expensive? Is it discontinued? Is the supply low? Would a group realistically be able to take more than 50% of the supply? And does it trade up to something, or does something trade up to it? Trade ups create price floors. It's why the market works in the way it does. If a group pumps a skin from $10 to $100 and it's a pink, well, if those purples are $5 each, why would you buy the pink when you could buy 10 purples, spend $50 and get an $100 skin? The math forces prices to be in relation to each other. Lower tiers have to follow because of arbitrage, baby. And that way, you could take advantage of a pumped skin without buying the actual pumped skin and putting yourself in a much more risky position. That is asymmetric upside. The maximum amount of money you can gain is much more than the amount you can lose. So now you're not betting on the pump itself, you're betting on the math equation that determines the price of each skin. And that's how you position yourself when things are getting pumped in this market specifically. Historically, Chinese groups went for the high tier, high ticket items. And they've bought their fair share of trade-up fillers, but accumulation is starkly different now. Take the glove case. The Glock Ironwork, which is a blue, went from around $8 to $50 over the last month or so. Good play skin, 0 to 1 float cap, has legs. And they even started pumping that MP7 Cirrus. So for my lobotomized viewers that bought them at $10, you might actually be up right now, which is crazy. So this accumulation behavior, it doesn't really smell of pump, but as if they're building a long-term position. And if you remember last week's DE News China, we talked about Windking and his plans to retake the glove case over, bringing it back to those glory days price points where shit was like $80,000 for factory new gloves. An adjacent Chinese pump group said the same thing. there are plans to continue moving the MP9 prices upwards. Now I said, be very wary. The money needed to retake back these positions is going to be much more, and it smells of them trying to get buyers in so that they can exit, rather than them trying actually to raise the price again. And while that didn't happen with Windking, it very damn well happened to the MP9. By posting the place publicly, they created a wave of retail buyers and buy orders coming in on the MP9s. And as you know, buy orders immediately sell. So when you have this giant wall of buy orders and you have 1,000 MP9 Hydras, you sell them all at the same time right into the standing buy orders. And what happens is what you see on the Steam charts right now. MP9 Hydra went from $550 to $200 in like an hour and a half. Stained glass MP9, $900 to $400. And when you're on Steam specifically, you can't reverse the trade. So you catch a falling knife and there's really nothing you can do about it because you have to hold it for 7 more days. And that's why you don't enter pumps directly. Someone holding 5% of the total factory new supply can fill every standing buy order in 30 seconds and will crater the price before you even realize that the price has been cratered. You enter intelligently with trade-up fillers or adjacent skins within the collection. Smaller gains, yes, but you are insulated from getting the rug pulled right on under your feet. Now these trades only work if you can enter with leverage and precision. When you're dealing with such a volatile market, the last thing you need is to enter a position 10% down. That's why I work with uuskins, today's sponsor. uuskins is a third-party marketplace which offers the lowest rates across any market within the US and EU. 24/7 support and a more reputable buying system that makes you less susceptible to trade reversals. So whether you're accumulating on speculation, buying skins to trade up yourself, or just looking for a simple arbitrage opportunity, uuskins is the only way in which to do it. But don't take my word for it. Go check it out for yourself. Scan the QR code on the screen and take a look at what uuskins has done for the Counter-Strike trading game. Now on our China Watch stream last night, we saw a lot of accumulation of the limited edition items. XM Solitude, M4 Solitude, Deagle Heat Treated, which has been around for a few weeks at this point. And it should invite a few theories in your head, right? What if Valve makes these limited edition items trade upable? A lot of people say that wouldn't make them limited edition anymore, but I disagree, right? If they wanted them to truly be limited edition, you wouldn't be allowed to market or sell them, right? You could just buy one off the market. If anything, trading up diminishes supply, making them even more limited edition, if that makes sense. Regardless, that would be a massive structural shift, and you would see a lot of price movement shoot upwards. But the accumulation data doesn't really match up with the theory. The XM Solitude has a 0 to 0.7 float cap. If you wanted to use those XMs in a trade-up and guarantee a factory new outcome, your floats would need to be under 0.049. But they're not doing that. They're just accumulating them in factory new. So if they had knowledge of a trade-up system incoming, they would be buying specific XM Solitudes. So this spells more of a pump rather than them knowing something or speculating on something and purchasing ahead of time. And the risk here is high. Like I said, your best opportunity to play a pump is to go around the pump and look for fillers and adjacent skins within the collection. But there are none in a limited edition item, at least right now. Can't trade them up, there's no adjacent skins, so you are entering a risky position by purchasing an XM Solitude right now. You're betting on their buying pressure staying steady, and you're also counting on them not dumping their fucking supply on your head overnight. Now, is it possible it works? Sure. There's a low supply, decent aesthetic quality, limited edition tag, so it has every attribute of a pump target. But possible and structurally sound risk profiles are different. Enter at your own risk. Now, a lot of you ask around, what's the difference between a 0 to 1 float cap and ones that's smaller? That's tomorrow's video. There's way too much surface area to cover in one short little segment like this. And while the XM Solitude purchasing patterns don't necessarily spell of insider knowledge because of how they're buying them, it is a very good broader pattern to be aware of. This market isn't regulated. Insider knowledge can happen, right? In hindsight, when we called that Inferno and Nuke being discontinued back in December, it worked out. They were accumulating active drops, which makes no sense. Also, side note, the dude that listened to that video and bought $2,000 worth of MP7 fades, I'm still looking for you, bro. I hope you're doing well. A lot of this market comes with predictions, but you can make more informed predictions than other ones. We've seen more accounts than usual buying Kilowatt, Gallery, and Fever cases, which are the only 3 cases that have been introduced in CS2 so far. Now, you could predict all 3 and buy all 3, but I think there are better plays there than other ones. It all comes down to your conviction. If you think Kilowatt is the next case to be removed from the active drop pool, that might be a good opportunity. If you think Fever gets removed from the armory in March, that's a good opportunity. If you think the gallery case becomes a stranglehold of Chinese pump groups because it's already discontinued, then that's a good opportunity. Gotta do your research and find the one that has the most legs and the most upside opportunity for you. See you tomorrow for the float cap video and Sunday for the news in general. Peace.